There's when's the last time we did one of these?
I don't know. A little while.
I think it was. Was it before the government shut things down again?
I think so. Yeah.
It's convenient, eh?
Early January. Yeah.
Nice
don't work. Get paid. Don't work. Don't come back. There's no emergencies going on that the government should be back. So take an extended vacation.
Yeah. You got to kind of
work as you see fit, people. You are not serving the people of Canada, so don't worry about it.
Anyways, I'm not. Look, I refuse to start with. I'll rant on the government later. I refuse to start with the government rant. But wow, yeah, it's tempting. It's tempting. It's taken all of me to turn back. But I want to ask you about something. So, because we launched this event. So the event's coming up, right? We launched the kind of the promote, the marketing, I guess, for the event. It's coming up on April 12th. Now I got to do a plug for it because you're crazy if you're not there. Go to yourlifeyourtermsevent.com and come now because we're kind of doing a bunch of different stuff between real estate and Bitcoin and business and all sorts of stuff. Okay, but here's what I want to ask you because I was looking at something. I was thinking about something for an article I was writing before, and I was looking back. I'm like, what's really made a difference for, I was thinking us, but then I was writing it. So it's coming, I guess, from me. And I'm just curious your opinion of this, because I look at it that these kind of three pillars between income and finances, okay, that's what's really made the difference for me in I guess my life, I think for probably both of us. And the first one is basically how things start I guess it's so simple that this is why it's kind of like I want to run it past you, because the first one is business or some sort of income, right? So you generate income and you run like a balanced budget, not really, you run a surplus because you want some savings. So you spend more than you earn at some point in time. That's kind of the long-term goal, because then with the additional
you spend
funds,
less than you earn.
Sorry, spend less than you earn. Yeah, that's a better way. I was
like, holy shit, is my math wrong? Like, have I been looking at this all wrong? You can do that?
No, that's a good idea. Yeah, that'd be more fun. But yeah, so you spend less than you earn, right? And it changes. I mean, as your income changes and career and stuff like that. But you've maybe a business grows depending on what you're doing. Business has other advantages with, taxes and different things, and you can reinvest funds and grow different things and move money from one business to another, but whatever. So you earn money, you spend less than you earn. Then you take some of that money, or then at least what kind of I did, and I think kind of we both went down the same path. We took some of that money and put it in some sort of assets, we call them performing assets, income producing assets, self-liquidating assets, whatever term you want to use. So we used real estate, and these assets were able to spit off income as they were paid down. So we had we rented them out. So we had income coming in to cover those expenses. The asset eventually gets paid off, right? It also protects you against inflation, right? Because real estate is like a hard asset, an inflation hedge as well. And that spits off money. So then you can take that money, and then the whole idea when you have more money coming in than you're spending is then you want to save some of that money. Like you want to spend some, you want to enjoy life and stuff, but you also want to have some savings. And then we saved that money in another hard asset. So gold, Bitcoin, those were the two primary ones, but other hard assets like that. So the money went from, the financial kind of picture went from this, the business, right? Early on, it was our jobs, then the businesses, to this real estate, to the savings. In savings in assets that would protect the purchasing power of those savings. And I'll go back to gold because I know the number from the year 2000 in Canadian dollars. It was a 9.1% compound annual growth rate. There's a lot of commies around, so I know. That's why. Compound annual growth rate. And so that's depending on the inflation number you use, that's kind of right in line, if you use M2 growth or use other.
Yeah, there's basement's like going to be around 7-8%.
Yeah, it's somewhere around there. So kind of served its purpose, right? So it just seems like, looking back, I'm like, it's easy now in hindsight. I'm like, it's pretty simple. But if someone explained that to me when I was 20 years old, said, well, this is what you do. I'm like, no, that's not what you do. It's too slow. It's first of all, it's too slow. It doesn't work. It's not sexy enough. There's no kind of like flashy, here's this top secret strategy. So that's just what I'm wondering. But I'm like, it just kind of breaks down to that really, or a lot of what I've
like the turtle wins the race.
Yeah, it's kind of been that.
I think that's a good way to summarize how to get ahead and live life freely. As you're saying it, I was like, that's interesting, because you said get a job or you start your own business, or we got jobs and started your own business. The benefit of getting a job is your income is higher faster. When you start your own business, it's lower for longer, but then the upside, if you're smart at marketing and can grow the business and you're a smart business operator, is the tax advantages are better and the income potential has a higher ceiling. Yeah. So, I was just thinking how like a lot of people will get caught in a 9-to-5 job because after you leave school, you got some debt. You want to do this strategy that you're mapping out, you get a job, but then you never leave the job. So then you actually really need some assets like real estate to protect your purchasing power, to gain leverage, to outpace the debasement. Like you need the real estate.
Yeah, I guess the reason I explain it like that is I never want someone to think that, you have to have your own business. You got to start a business and that's the only way. There's other ways. You can have, a lot of people want to leave their job and that's great. Some people don't. And you don't need to leave your job to have whatever plan you have. But I mean, that's generally what we've seen. And I mean, other people will choose other assets. Some people will just invest in stock market index funds. Yeah. And the way through debasement, the way those have performed is roughly the same thing as...
You're just not getting ahead. Even with dividend reinvestment, S&P is like going to be 10% tops.
Yeah, but I was talking about gold at 9%.
You just don't get ahead.
Well, the real estate helps.
You don't fall behind. You're not getting ahead.
Yeah, for the savings, right. But the real estate gets, because of the leverage, if used wisely on a cash flow performing property, then the leverage on that property allows you to get ahead because it amplifies the returns.
Yeah.
Right.
Yeah. Amplifies the return. So if anyone listening to this, you put 20% down, compound annual growth rate of real estate has been 7%. 7% on your 20% is 35% annually.
Yeah. And
as it becomes less performing as the property's paid off, because you've put more into the property as interest payments, you have less leverage on it. So it becomes a poorer performing asset overall as you have less debt on it. Your income component's going to grow, because when you pay off the debt, you're going to get the free cash flow. But the asset itself, as you own it longer, actually performs less well.
Yeah. You know what? I guess that's
weird, right?
Yeah. But
it's accurate.
It is, except I just kind of thinking this through. Yes, because of the amount of equity that's trapped in it.
And the interest, all the money you've put in for interest payments, you're not really getting a return on that extra money that you could have put in another investment.
Yeah, but I'm just talking, if you look at the kind of ratio, because if you look at the ratio of income it spits off to the initial investment, as that mortgage gets paid down, it's actually still very attractive. It's actually
it's a great investment.
But because of the you're talking, if there's $500,000 of equity left in the property and it's spitting off $2,000 a month, then it's not great return that way. Except if you bought that with $50,000 15 years ago and is spitting off $2,000 a month now, the return's amazing.
Yeah, no, it is. Yeah, I just have never taken into account all the interest payments I've made on the property. So for, let's say, 20 years. And now when you really look at the return...
Yeah, but that doesn't come into the return, because the return is just the profit compared to what you put in. So the expenses are the expenses. It eats into the return, but it doesn't dictate. The return was established before that. Do you know what I mean? Like you knew going in kind of what your carrying costs were. So the interest you've paid over those years.
Sure. But what's my return on that interest? Do you know what I mean? Like I understand what you're saying. Like I get the income component from the property. I can calculate the return on the initial down payment, but I would really have to look at how much if on a 25-year amortization mortgage, what are we paying 2-3 times?
You mean if you borrowed those funds and did something else with them?
If I just didn't borrow those funds, I just took those funds and did something else with them. There's an opportunity cost.
Well, you don't have those funds to take because those are borrowed funds. Like you only have the down payment.
Well, how am I making the mortgage payment?
Through the rent.
On purely a rental property. Got it. I was just thinking your primary place of residence is like people's home.
I don't even equate that. Yeah, to me that's a whole other. Yeah. Okay, I see where you're coming. That's a whole other conversation.
Yeah.
That's where.
Yeah, that's the own versus rent kind of debate and argument and that whole bit. But yeah,
most people I know that have gone through that own versus rent. There's one way to look at it, which is strictly the financial numbers.
Yeah,
and then most people that were not owners before eventually owned because they said, they're like, you know what? Because they were kind of like, we lived here for a bit, then we moved here, then it's nice, you know, I just kind of want the freedom. I don't want to be tied to a house. I want to say all the ones I can think of. Maybe I can't, you know, I'm just not recalling someone, but they all end up wanting a home base. It's more for if they have a family, then they want that home base, that
There's a certain security. I associate some level of my personal freedom with the security of having a home base. You know, like there's like, it is a little freeing. Yeah. Like I don't have to answer to somebody for where I'm going to live or have to worry about the landlord saying, hey, you're not renewing this lease next year. Yeah. I want, like, I think you need some sort of home base.
Yeah.
Maybe you don't have to go extravagant with your family home, but there is something to owning a home. And if you don't, you miss out a couple of years. Like if you're not owning during the COVID years and they debase the currency like freaking 20% in 12 months, you miss a couple of those years. I don't care what math you're doing. Did your math account for debasement of three different years over a 20-year period that had debasement of like 20% in that year or something?
I did two different podcasts recently. I don't know, a little while ago. One was with an insolvency trustee. One was with Sean Moore, who you know. And he focuses on, I don't want to say high net worth, but you know, I guess he's a portfolio manager for, you know, decent net worth people. I don't know what the correct term to use there is. And both of them, unsolicited by me, they both said that there was two economies in Canada, one for asset owners, one not for asset owners. No. So the way we started with Doug, when I asked him, I'm like, so what do you see? Like he sees all sorts of stuff in the economy. Like, how do you seeing the Canadian economy? He's like, well, you know, to me, there's two economies in Canada, asset owners or not. I'm like, oh man, like these, you know, other people. So this is a guy that sees people coming in, either filing for bankruptcy or consumer proposal. And so he's seeing that end of things, and he sees it like without the assets, it makes a big difference.
I think it's your only chance.
Yeah. So
I just don't know anyone unless you're like super high earning top salesman, a surgeon, you know, like super high earning individuals. Yeah, I guess they're going to be okay. But if you're not super high earning right now, I don't understand how you make it through without just piling on debt for the rest of your life. And then you're in the debt handcuffs forever. Yeah, I agree with that. Yeah, so I think that's the right way to look at it. I think it's totally the right way to look at it. And I think that's what drove us into real estate. It was like, it became pretty obvious to me in my 20s, like, holy shit, like I'm going to work my whole life to pay my Visa card off. Like, this is what I'm doing. This is my life.
Yeah, you need extra pools of capital to pull from it.
You have one unexpected car repair that you got to throw on your Visa that you didn't account for. And I tried all those budgeting softwares. Like in my 20s, I went through that personal finance mode where you download all those like personal finance tracking systems to track every dollar you've spent. And they are beautiful. But no matter what I used, it never accounted for like the curveball of just life, whether it was positive or negative. A positive would be like, a bunch of friends are going to Europe for 6 weeks. Do you want to join? Like, where did you have that planned? And then you have to say no. And then the software will teach you to say no, because then you're on track for your goal of 65 years old, retiring with enough money that you can get into Florida for a few months a year. And then you tell yourself you're disciplined and smart and you're saying no now so that you're financially prudent. And I'm like, this is fucking bullshit. I just hate living that way. You know what else pissed me off? Sorry, those financial articles in the Financial Post where it would be like a financial planner was never allowed to teach a family how to make more money. I don't think it was like, it was beyond the editorial approval. You could only reduce costs. So like anytime there was a couple that said, hey, I have this much money and here's my assets and I want to retire by this age, the advice was always horrible. Did you ever read these things?
Yeah.
The advice was always this. Well, you have 2 rental properties. You have all these stocks and you have these dividend paying stocks and you have these 2 rental properties. I think you're over leveraged on real estate. I really think you need to sell the real estate. And my question was always like, they're only over leveraged on real estate because real estate has been the winner. And it's been that much more of their net worth that real estate has been winning so much. That's why it's over leveraged. You don't want to sell your winners. Do you know what I mean? Like, it always baffled me. And they would never talk about making more money in those articles. So anyway, I'm way off track, but that's what went through my head reading that.
We were laughing the other day. I forget who I was talking to, and we were talking about the 407 contract. Speaking of selling your winners. And we're like, how stupid was that they built this asset that was just going to spit off income for however long?
Yeah.
Right. And I know if the government was managing it, now I can go on a government rant. It's not the beginning. So they would mismanage the hell out of it and it'd be a disaster. But you had this new highway, this road
that produced every year for you income year over year over year.
And you're just like, let's get rid of short-term thinking.
Yeah.
Right. It's like when they were talking about looking at the LCBO and selling that off. And like, look, I know, like, you know, maybe some people are going to disagree with the liquor laws in Ontario, and that's fine. And there's shortcomings there for sure. But I mean, as just strictly from looking at the government as a business, you have this asset that is spitting off money and that's paying for things in the province because it's producing income. Whether you think it's paying
get rid of it.
Yeah, whether it's paying for roads or healthcare or fire, whatever it is, it's paying for stuff. Yeah.
It's too good.
Yeah, and
let's get rid of this thing.
This is outrageous.
We accidentally found a winner. Let's get rid of it.
Short-term thinking.
We are not good at finding winners, but we have one in our hands. What should we do then? Sell it. Get rid of it. Oh my God, guys. We're the government and we have something that's producing positive cash flow.
Got to get rid of it as quick as possible.
We should unload that thing. Let's get rid of it. But this... now I'm having flashbacks. I know we have an election coming up and we usually don't get too political, but I just...
You're talking about the provincial one or
no,
hopefully the federal one?
Because I saw...
we have a new prime minister in like a month, what, 4 or 5
the central
weeks.
banker. We have a central banker who wants to become the prime minister. And I saw something, I don't even know if this is true. So like, maybe it's not. I hope it's not. But there was one quote of him saying in English that we should build an east-west pipeline in this country. It's like, yeah, we all know that. Like, what, you know, why are we waiting so long to do this? But then in French, because Quebec is so against this pipeline, he was saying, I guess it's the next day or around about the same time, they would never build such a pipeline without Quebec allowing it. But in English, he's saying, yeah, we should. And I'll use like some Emergency Measures Act to make sure this kind of stuff happens. And I'm like, this is where we are in the world. We just openly have people just talking out of both sides of their mouths who want to rule this country. And this country is too beautiful to be ruled by such people. I don't even think we have anyone that is good enough that deserves to run Canada. We have the most beautiful country. Like, I swear to you that coming back from Dubai changed my entire viewpoint on this country. We have all the fresh water. We have all the lumber. We have all the minerals. We have all the energy. We border on 2 oceans. We have the Arctic. We should all be rich. Everybody in this country should be getting checks every month saying, you're so rich, we actually have to give you money. We have sold so much to the rest of the world because you have such beautiful things in this country. We actually have to send you a check, Mr. or Miss Canadian. Here you go. You are rich. And that's what the check should say. Like, holy shit, you're so rich. And these checks should just be coming out. But instead, we can't even get a pipeline, or they built one, I think, from Alberta to BC. They built the second one or whatever they did. But it's just like, how can we not have a refinery in this country that like is doing this stuff? I don't just get it. But anyway, so the federal election, I've decided no one's good enough to run the country. No one is good enough. But having said all that, I think I might drag people to vote. I've never voted in elections with such purpose. I think I missed like 5 federal elections. I didn't even vote. I'm like, this is useless. But now I'm going to be dragging people out to vote.
I believe if you don't vote, you can't complain. So now all your complaints...
I'm definitely voting.
For the last...
I'm 100% voting.
Whatever, all your 4 years...
I'm 100% voting.
No, but if you didn't vote last time, I have to throw all those out the window.
I voted in 2020, just assuming everybody would kick out the Liberal. I'd seen enough that I thought, okay, you know what? The guy had a good run. He had the good head of hair. All right, I'm going to vote now. Like, the party's over. I'm sure everyone else is voting with me. And then when he won again, I was like, I think that was my first wake-up moment. I'm like, wait a second. People voted this guy back in? Even in Oakville, which I thought all these people probably work on in finance, downtown Toronto. I'm like, for sure, Oakville didn't vote Liberal. Yeah, no, they voted Liberal. I couldn't believe it. So no, I'm voting. I voted in 2020 because we voted, even though it was very dangerous to vote because it was the pandemic. I think we all risked our lives to vote. Wasn't it right around the pandemic?
I guess it was 2020, yeah. 2021.
Was it 2021?
Yeah, so we had already survived a year.
I think it was still very dangerous, but we all went out and voted. And they did a bunch of mail-in ballots and stuff like that too. Anyway, I'm now officially dragging people. I'm actually going to go around and just pull people up in my car, take them to vote. Hey,
we should start a service. That'd be great. Not even the car. We'll put them in the back of my truck.
A truck. Just get your truck. We'll just start driving people. Hey, I'm at the wrong polling station. Doesn't matter. Just get in there and vote.
So I have a imbecile. It's a T-shirt with a picture of Trudeau, and it says on it "imbecile." I saw it online, and it's got the definition. It's like someone that's like, I don't know, that's basically an idiot. I forget exactly what it says. It's structured like a definition. And I think I wore it to the gym one day, and I guess I had to go run a couple errands after the gym, so I was out with it, not even realizing. At every single store I went to, the person that was checking me out commented on the shirt.
What did they say, like positive or negative?
Positive. They're like, I like your shirt. They're like, yeah, I can't wait. And I was like, oh yeah, and I felt myself almost apologetic. I'm like, oh sorry, like because it's, you know, a little bit like, I don't know, I don't wear shirts like that regularly, but everyone was all for it. I'm like, wow, the number of people that really dislike this guy is pretty big.
Like, just think how great this country is. Like, if you had to choose a country to be the leader of, Canada would be on the top of your list. You have everything in this country. You literally have everything. Okay, maybe we don't have the European cafes. We might not be able to battle Europe on some of the European cafes are pretty damn good. But overall, I just mean from natural resources and wealth, if you had to choose a country, it would probably be, this country is going to be really high up there. But we just don't have anyone in there. Let's see if this next guy wins the election and what he can do. So, but I'm not talking about the central banker. We can't, listen, I've watched central bank.
If he wins, he's not the election. If he wins, he's going to be he's officially the next prime minister.
No, I know.
Right.
But he's an
unelected prime minister. Awesome.
My favorite part of this guy campaigning to be prime minister is he was part of the 2008 central banking cabal that when Wall Street was failing, they saved all of Wall Street. They kept interest rates so long that propagated this whole real estate problem. And now he then left Canada as the Bank of Canada governor after all of saving all these banks, being part of all that, then went to be the Bank of England governor. And then they kind of like don't have the nicest things to say about him over there. Then somehow he's found his way back here and he's saying, well, there's all these problems. Remember, he was the Bank of Canada governor during the great financial crisis that caused all these problems. That was a big cause of all these problems was keeping low interest rates for too long. And now he's back to save the day. And it's just, I just can't see. I don't know if Canada votes this way. I can't wait to see the outcome of this election. I'm on the edge of my seat for this one.
If it's not obvious we need to change, I mean, yeah, we're headed very clearly in the wrong direction.
We need a change.
Hey, it's Anthony Molinaro from the Your Life, Your Term show, and I've got some exciting news. On Saturday, April 12th, we're hosting our biggest and most in-depth Your Life, Your Terms event yet in Mississauga, Ontario, and space is filling up fast. This is your chance to join us for a transformational day packed with powerful insights, strategies, and connections to help you live life on your terms. We'll be covering the biggest real estate opportunities, what's happening with the Canadian and global economy, how to protect and grow your wealth with Bitcoin and hard assets, and how to use marketing strategies and disruptive technologies to build freedom and income for yourself. But here's the deal. Tickets are going up the closer we get to the event, and with the early flood of registrations, we'll likely be hitting capacity. If you want to guarantee your seat and save some money, register now before it's too late. And remember, if you're a Rockstar Inner Circle member, your tickets are completely free for yourself and your guests. Head over to yourlifeyourtermsevent.com and secure your spot today. You don't want to miss this one. That's yourlifeyourtermsevent.com.
Let's switch subjects before we go over all that. There's one thing I wanted to talk to you about because you brought up the assets. Like, I like the way you mapped that out there, and we should rehash it about like life and kind of building assets and then using the income for fun. Can I talk about the spreadsheet, the BREAS thing?
No.
Okay. I didn't know if we were keeping it top secret. So everyone listening, we came up with this.
I like how no matter what I said, it's nice that you asked, but even if I was saying no seriously, you would have done it anyways.
Yeah.
It wouldn't have made a difference.
Totally. Listen, we came up with this thing that we're calling BREAS, the Bitcoin Real Estate Asset Strategy. It's pronounced BREAS, but it's spelled BREAS, Bitcoin Real Estate Asset Strategy. And it came about because of this. Check this out. Nick and I were looking at this the other day. Let's say you're fortunate enough to have, I know, Nick, we can explain this a couple different ways, so maybe you explained it in a different way in a second. But let's say you're fortunate enough to have a rental property, and you've heard us, chat about Bitcoin for a long time, and you're like, I just don't believe in it. I don't want to buy it. We think we came up with something interesting for you to at least consider. Because if you have a rental property that's spitting off some cash flow, and we know a bunch of real estate investors that have some properties that spit off some cash flow. In the example I'm using, let's say you're fortunate enough to have one rental property that spits off $475 worth of cash flow that you don't immediately need for life. So you're in a fortunate position. There's no doubt. But if you take that 475 and then you go get a credit line against that rental property at a 5.7% interest rate, the 475 a month would pay for $100,000 credit line against that rental property. So this is assuming you can do this and there's enough equity in the property and the banks are going to allow you, but you get $475. And that gets you $100,000. Then let's say with the $475, the $100,000 credit line that you are now funding with that cash flow from that property, you smash buy Bitcoin with it. I'm not telling anybody to do this. This is a hypothetical thought experiment example. You smash buy Bitcoin with it.
People won't even. What do you mean when you say smash buy?
Everybody knows what smash buy means.
Everyone knows?
Everybody knows what smash buy means. Smash buy means you buy it right now. You take the money, you buy it immediately. Smash buy isn't slow buy. Smash buy is buy.
At least it's like an up-to-date term versus like when you talk about humble pie.
Humble pie
around here.
No, humble pie is
what's wrong with Tom?
Anyone listening to this, if you're not familiar with humble pie is when you eat humble pie, it means you've said something that's silly and you're like proven wrong and you have to eat humble pie because you were wrong. So you're like, oh shit, I have to eat humble pie.
Tom's the old guy in our office and everyone's...
No, humble pie. Humble pie is an amazing term that should be used widely.
If you ask the internal teams, the marketing and membership teams here, when you said it, everyone's like, well, I don't know what that means. And they just went along with it because they didn't ask. And then when we pointed it out, then
they are not cultured. My role is to bring some culture into the world in the way I can. And eating humble pie is the way they should eat. You know what? They should be eating humble pie because they don't know what that means. So now you have and by way of example, you have a $750,000 property, this rental property, spit off $475 in cash flow. With the $475, you were able to fund $100,000 credit line on that rental property. You now have a rental property at worth $750 and you have $100,000 worth of Bitcoin that you purchased. So now let's map forward 10 years. After 10 years, I'm going to use a 7% appreciation rate on the property. That's the historical long-term average. It's not short-term because interest rates can make real estate do wonky things short-term.
But from that long-term based on the TREB
Greater Toronto area.
It's actually based on a number of areas because I've seen other ones.
Well, because the Toronto board gets properties from elsewhere. Yeah.
No, but I know we're basing it off the Toronto ones from 1969.
Yeah.
That's our numbers. But when I've looked at other markets, even in the States and things like that, in different markets, major metro areas and things like that, they are, the numbers are actually quite similar to 7%.
It's basically
you're right. You're right. That's exactly what I'm saying. Yeah.
Yeah. So it's 7% for real estate over medium and longer term. So we're going to appreciate the $750,000 rental property at 7%. After 10 years, it becomes not $750,000. It becomes $1.378 million. So that's like awesome, right? Went up 7% compounded over 10 years. I guess that's 9 years of compounding. In the 10th year, it's $1,378,000. Now, the Bitcoin that you purchased, I'm going to use a compound annual growth rate of 29%, which is Michael Saylor's, what he thinks the average rate will be over the next 20 years. That's why I'm using 29%. Nick, I just checked using Grok what the last 10-year compound annual growth rate was for real estate from January 1st, 2015 to present day, and it's 65%. It's actually 66.6, but I thought that number looked a little spooky, so I said I'm saying 65%. So it's been 65% over the last 10 years, but I'm going to use 29 because
for 10 years or 20 years using 29.
10. Okay. I'm going to extrapolate it for 20 just to see what happens. After 10 years, the $100,000 that you smash bought in Bitcoin becomes
with your humble pie.
You didn't know what humble pie meant, so you should be eating humble pie. The $100,000 turns into, are you ready? $989,000. So for $475 in cash flow that you gave up to fund your $100,000 in Bitcoin purchase, if we were right and it grew at 29% compounded over the next 10 years, your $100,000 turned into $989. So now you have a property worth $1.378 and 989 Bitcoin. You have a total asset value, if you combine the two things, this is where we call the BREAS strategy, Bitcoin real estate asset strategy, of 2.368 million. So instead of just having the real estate at 1.37, you have 2.36. Now, if we roll this forward another 10 years, because we're wild and crazy, if you roll it forward another 10 years, the property goes from 750,000 initially. After 20 years, it becomes 2.7 million. On the Bitcoin at $100,000, if you now roll it forward, not 10, but 20 years, compounding at 29%, it's not 989,000. Are you ready for the number? It's 12.6 million. So now this one $750,000 property and $100,000 in Bitcoin, 20 years later, is a $2.7 million property, 12.6 million in Bitcoin, for a total Bitcoin real estate asset strategy value of, hold on, 15.3 million. Just as a thought experiment, if there's somebody out there who has a rental property, do your own due diligence, make your decisions. Our hypothetical example here could be 100% wrong. But if this doesn't make you think at least about leveraging your real estate to get some exposure to Bitcoin, I don't know how to convince you otherwise. Especially if you have a rental property with cash flow that you don't immediately need. The 10-year compound annual growth rate of Bitcoin to date is 65%. We just said that. So me using 29% isn't like some whacked out number.
It's hard to fathom for a lot of people, though. Like
I know, but we're not pulling numbers from the sky.
You're right, but to think 29% over the next 20 years,
sure,
that's a hefty number.
Okay.
I don't know.
But you know what? What do you think somebody would say, Tom? I would believe you if you use this number. Give me a number. Let's see what the...
Well, cut it in half. Go to 15.
Okay, 15. So now the Bitcoin after 10 years is 351,000. And after 20, it's 1.4 million. Mm-hmm. The property's 2.7 million. The Bitcoin's 1.4. And you sacrificed your $475 in monthly cash flow to do that. Like the risk reward here, because let's
that's the key to me.
Risk reward.
That's what I think it comes down to.
Yeah.
Is that
the asymmetry on this bet is wild.
That's exactly what it is. And I don't think you end up like with something that's zero at the end of the day.
Because let's say after 20 years or 10 years.
So you're $6,000 a month in, $6,000 a year in for the interest. So
60
10
grand.
years, you're 60 grand.
After 20 years, you're risking 120 grand here. And let's say the Bitcoin goes to zero. The real estate growth is going to cover that loss for you, no? And we know it's not going to zero. So cut it down to what, half?
Yeah, it seems zero seems like a very unlikely
cut it in half. So now you bought 100,000.
So you lost 60. Call it.
You lost 60.
Which is hard to think too, because your dollar cost averaging in every month. So to be down 50%, you know what I mean? Like you probably wouldn't lose 50%. So that seems like a pretty,
No, you smash bought the Bitcoin.
Oh, sorry. Yeah, I'm thinking you're using the monthly. Yeah,
I guess you could top up monthly, and I think
no, but you smash bot. Yeah. So you got the 100. So yeah. So let's say you're down by half, but 60 grand because like you said, the risk reward, because the other asset offsets that if you needed to.
I mean, again, I know this is not for everyone. I know not everyone's in this situation, but if you're a real estate investor and you're looking to dip your toe in. And this is something you need to at least consider. At this point, I feel if you don't consider it, you to your own asset base aren't acting with a fiduciary responsibility that you should be.
Mm-hmm. So for me, there's a number of ways to look at this stuff. It's like, so one is the way you just explained. Another way is that this protects, so if you're an investor that has 10 properties across the board and you're going to have capital expenditures like heating and roofing and whatever else comes up, then, it's highly unlikely that inflation disappears, right? It's much more likely that inflation actually stays the same or accelerates. And this has the potential to protect your portfolio that way. So that's another way to look at it. And then even beyond that is that if you're taking these assets, if you think that the over time, so some Bitcoin people think over time that the premium on the financialization of real estate, so people protecting their savings by using real estate will diminish. Then it's kind of you're hedging your bets.
Yeah.
Because if that happens and Bitcoin absorbs some of that, then you still get the benefit of that with your real estate. And if it doesn't, well, then you own the real estate and then the Bitcoin doesn't jump as much. So you're safe. You're saved there. So if you believe that shift could happen or couldn't, it kind of covers you in both ways. The biggest thing, I guess, to consider for me, the biggest risk with this whole thing is that money printing doesn't happen. Inflation doesn't happen. Everyone balances their books and there's a deflationary episode and the value of all this stuff kind of comes down. And I think the likelihood of that, if I have to play odds, the odds on that are slim to none because there's far bigger problems. Like if that really happens, there's far bigger problems in our financial system that happen.
Sure. It wouldn't change anything to do with my Bitcoin.
No, it wouldn't. It would change the dollar value of it.
Sure.
It could potentially, just like it would change the dollar value of the property.
Sure. Yeah.
But
they just can't let deflation to happen. That's a systemic collapse of a debt-based monetary system.
Yeah.
Like, let's face it. I mean, technically they can't, like, it's not, that's impossible.
Well, there's not, if like Foss always talked about, there's not a 0% chance. I know, but there's not a 0% chance of a lot. But if you're playing the odds, there's like the odds on that one to me are as slim as they get.
The thing that this, when we first started playing around with it, it's like, can you take $475 and turn it in at 29% compound annual growth rate? After 10 years, it's $989,000. Like, can you really take $475 a month?
Yeah, is that actually a possibility?
Yeah, and if it is, it's insane. And then the asymmetry
possibility of that to me is higher than the possibility of it going to zero or even getting cut in half.
Agreed.
Yeah.
Agreed. Even if you use, like, don't use 29, I don't know, use 24, use 20, use 19. But the return on this is just silly. And then it's the asymmetry. Like I said, I can't get over it. Like, you're risking the $475 a month and that $100,000. But the upside on, like, what happens if we're low? Like, what happens if it's not 29%? Like, what happens if it's like 32 or 35? I just think when you look at these, like in these numbers at 29%, do you know when the Bitcoin passes the property value? It passes the property value. There it is, year 12. In year 12, the Bitcoin at 100,000 passes the value of the property. It's just when you stare at this numbers, and we're going to this calculator, what we're calling this Bitcoin real estate strategy, BREAS, we're putting up on the website. So if you want to monkey around with these numbers yourself and put in different probabilities, and you're building it out, and the way you build it out was smart because you have a field for people to put a compound annual growth rate for the first 10 years and for the next 10 years, right?
Yeah, just if you want to kind of split it up. So you think that it might grow faster the first 10 years versus the next 10 years. Maybe it does, maybe it doesn't. We want to split it up into every 5 years. It just becomes too many fields. But yeah, we split it up.
It's just to get the idea across.
Yeah. And then there's the idea of like, maybe you don't want to take, because some people don't want to carry the $100,000 line of credit, and that's fair. You don't want to. You don't want the debt hanging over your head. No problem. That, even though the idea is that the cash flow would cover it, but maybe there's interruption in that cash flow, so you would have to be prepared. Yeah. There's all sorts of caveats, right? For sure. So like, we're keeping it simple purposely, but you could then monkey around with, okay, maybe you just want to put in 10,000 initially, and then you're going to put in so much every month as well to see how that offsets, how that would grow as well. So maybe you're putting in 10,000, but then you're going to take a portion of that cash flow, $300 a month or whatever, every month for those 10 years, and how that number plays up. So you can play with all the different scenarios and see It
just visually gets you thinking. Like, I think this just
it graphs it out. So when you see the graph and you see some of the growth rates, you're like,
what am I doing here? And this is, I think, for somebody who's kind of been exposed to Bitcoin, but is not really ready to sell their real estate just yet. It allows you to kind of play in both worlds. Like, you're totally hedging, like you said. You can use this one property to hedge. And we know multiple people that don't have $475 a month in cash flow. We know that they bought properties a long time ago, and they're fortunate enough to have $1,000, $1,500 in cash flow.
Or more.
Yeah.
And some people maybe now don't have any, or like there's some condo investors that are negative. Like,
this is just the example that really got me thinking. When you look at real estate and you're not really ready to dump it for Bitcoin just yet, at least look at this before you outright dismiss it altogether. Just investigate the numbers a little bit. So that this is going to be on rockstarinnercircle.com/probably BREAS, BREAS. I don't know. On rockstarinnercircle.com, you'll be able to find that.
Yeah, we'll put it. It's not done yet. It'll be
in the show. I guess we'll put it in the show notes or something. It'll be around. You'll be able to find it off rockstarinnercircle.com. But I think it's just worth looking at to think about for yourself. I don't know, it just kind of gets me thinking. And I think your point, it's what Leon Vankum always talks about with his real estate analysis, is that if you're a developer who decides some of the developments they're not going to sell off, they're going to keep as long-term rental.
Yeah, and you have to plan out 10 or 20 years.
And you have to plan for new roofs and windows. If you put a little bit of the funding of the project into Bitcoin, the growth of the Bitcoin can make your maintenance nightmare that you have to handle with real estate kind of go away.
And
that's really game changing.
Yeah, 100%. Because I'm on the condo board of the office buildings here, right?
Does our condo board have Bitcoin yet or what?
Oh, they can't. You're not allowed.
Make it happen.
I know.
What do you mean not allowed?
I know.
You've never lived by not allowed. You're telling me it's not allowed. Get a wallet and stuff some Bitcoin in it from the fees.
Yeah. And then I'm stealing money from people.
No, take the fees. You're just telling them you're holding it in Bitcoin. Be open about it.
But no, I could be wrong. My understanding is the condo corp docs and like the regulations around condominiums, you're actually not allowed to.
And we can't vote to change these condo regulations?
I think it's beyond this building.
Why, they're like provincial wide?
Well, there's a condominium authority. Really? Yeah, I had to take a course to be on the board.
Ugh.
Yeah. So
I just propose
based on the course
amendment. We just propose an amendment. Propose an amendment. We want to do something smart. Then it'll actually, don't say that, I'll get shot down immediately. Say, hey, we have a stupid idea.
I've never actually brought up the topic, right? And I've never dove into it. So I could be wrong. Maybe someone can email the office and let me know. But my understanding is you when it's structured the way it is right now, we're not able to, but I could be wrong.
Because does this condo have some savings?
Well, yeah, we have the
reserve fund.
Thank you. Yeah.
Yeah. So some of the reserve fund should be in Bitcoin.
I know, but make it happen. It's sitting there earning interest. And you know what? The last couple of years, because
earning interest, don't even make me laugh.
Because the interest rates went up, it was actually, I was like, okay, at least it's something. But then before that, it was almost nothing. And now it's going to go back to almost nothing again. And I'm just looking at it. I'm like, this is crazy. And so then every couple of years.
I want it to go back to almost nothing, because when it got to 5 or 6%, people tricked themselves into thinking, well, at least I'm getting something.
Yeah.
I'm not, it's not that bad.
Yeah. You're right. That's what it is. It's not that bad. Yeah. But then so that we have to get audited. And then you also get the engineers reports to come in and they look at all the life cycle of everything and what's left on the parking lot and the walkways and the roofs and all that stuff. So they plan for all these expenses. And I'm looking at their planning and I'm like, this is a joke, because it tells you what they're increasing, like, what the value is today and what the replacement cost would be in 5 or 10 years.
And what rates are they using?
I forget. It's different.
It didn't seem.
No, it doesn't make any sense.
Like it was too low.
Yeah, 100%.
Oh, shit.
Yeah, 100%. That's why all these condos, you always have to like, oh, well, we got to raise the price by this much. We got to raise the fees by this much. Oh, it's this much, because you always got to creep them up higher and higher and higher, because things don't.
Yeah, there's a special assessment on it. Everyone has to contribute.
Things just don't add up. I've seen it again with another condo that was a detached condo, and just the roads, when they did the roads, hired a terrible contractor, and the same thing happens. But because they didn't last as long as they thought they were going to last, so then it's like, oh, all of a sudden we need to fund the reserve fund faster. So we thought we could take 20 years again before we had this big expense of redoing all the roads, or whatever the number was, 50 years. But they're like, because they're degrading faster than they expected because it was poor work. Now we have to and the costs have gone up. Right, so we have to increase things faster, because when we go out and we get quotes for different things for these buildings, for maintenance or whatever, we budget it for the 1 year, but then the next year we have to get the same thing. So maybe it's the elevator contract. Well, the elevator contract's coming back, and it's like, well, it's no longer this cost. We thought it'd be this much. It's gone up by 10% because everyone raised their prices through inflation. So it's gone up 10%. We didn't budget for a 10% increase. Sorry, guys, we got to raise fees now. And I mean, that's a small one, but when you
the same thinking
everything,
and the same thinking applies to people's retirement. Like now that we have people in our 50s starting to talk to me about retirement, I'm always wondering what inflation rate their financial planner is going to use to do this planning. Because if you're going to be retiring at some point,
using 2 or 3%,
let's assume no one's using 2 or 3%. Let's assume I'm scared for people who are using 5%. If someone's like being aggressive, using a 5% inflation rate, or maybe that would be considered conservative because they're planning for the worst case and they're using like 5% inflation. If we know debasement 7, who's using 7% in the retirement planning on the inflation
almost
rate?
No one.
Nobody.
Imagine, yeah.
And let's say it's a little bit worse than 7% going forward. Let's say it's 7.5, 8, 8.5. What happens if it's
when you compound that extra 1%? It changes things quickly. Yeah.
The last 5 years of your life, you're going to be like coupon clipping. Do people know what coupon clipping, Nick, is, or do I have to explain that too? Coupon clipping is when you go to the newspaper and you cut out coupons to take to the grocery store. I think it's still a term that's used.
You don't need to anymore. You used to have to, but then now it's just they did do the sales price and everyone gets it. There's no such thing. Is there such a thing?
I think on cereal boxes, don't they still have like coupons you can cut out?
I don't know. I try to avoid cereal boxes at all costs.
I don't know. Yeah, I always, you know what?
But yeah,
even when coupons were a big thing, I was never organized enough. Like it would have to be someone being so kind in the checkout line to literally pass me the coupon to say, I got this extra one. You have marshmallows. Some people use these. They're on sale.
Yeah. Well, some people would show up. I remember like
I always admired those people.
And
they were so organized. Yeah. I always thought my whole life has been driven by this strategy. I think this is why the Financial Post articles mentioned earlier bothered me is I've always tried to outdo things by earning more. I just thought, if I figure out how to earn more money, I don't have to really be an accountant and look at all these expenses as closely, even though I know you have to stop the leaks in the bucket. Like, I get it. I just thought that's
what you got me. You put the holes in the bucket. I try to either.
Yeah, no, it's a perfect combo. It's a perfect combo. But there was something else on this BREAS strategy I wanted to talk to you about. Oh, no, it was Triffin's dilemma. I want to explain this because it's coming up a little bit. I think it's coming up a lot. With Trump's tariffs being announced, everyone's kind of confused and people have been asking us a lot of questions.
You said Trump. People are pissed off at you immediately.
I don't care. I know. Jeez.
I'm not saying you like or hate him. I'm just saying as soon as you bring up that name, there's a certain portion of people that
those people tell me. They tell me, and I'm like, well, can you think critically about what's going on and let's not focus on the person? Can we get past the person? Can you think critically about what's going on in the world, or is that's a non-starter for you? We're just going to stop there. You know,
it's kind of like how I get with Trudeau.
Well, that's permitted. In math, that's the exception that proves the rule. Okay, you're allowed to do that with Trudeau. Nobody else. The Triffin's dilemma is a well-known economic problem that the U.S. has been fighting since the 60s. And this guy, an economist, Robert Triffin, see, that's where the name came from, the Triffin's dilemma, Nick. 1960, Thanks. He testified before Congress about this. I'm going to read this out. This is why Trump is doing tariffs. This is why the new Secretary of the Treasury, Scott Bessent, I think it's Bessent, is talking the way he's talking is, listen, I'm going to read this out. This is Triffin's dilemma. The U.S. is the world's reserve currency. So if the United States stopped running balance of payments deficits, and what that means is if the U.S. stopped importing more than they export, they have to import more than they export. The international community would lose its largest source of additional reserves. Because when the U.S. imports all this stuff, they pay for it in dollars. Those dollars filter out into the globe, and the world needs U.S. dollars because it's the reserve currency of the world. They need those dollars. So if they stop doing that, the world loses this large source of additional reserves. The resulting shortage of liquidity could pull the world into world economy into a contractionary spiral, leading to instability. So literally, by definition, having the world's reserve currency, the only way for the rest of the world to get all these dollars is for more dollars to be flowing out of America than are flowing in. This is the problem with a nation state having the world's reserve currency. It's why people like Henry Ford, why Buckminster Fuller, all these smart people over the years have said there has to be a neutral reserve currency, not a nation state reserve currency. So that's the problem. And here it gets worse. Because they do this, they run deficits. To fund the trade imbalance, the U.S. runs deficits to fund all of this. If the U.S. deficits continues, a steady stream of dollars would continue to fuel economic growth. However, excessive U.S. deficits, a dollar glut, would erode confidence in the value of the U.S. dollar, which is happening right now with all the deficit spending and all the debt. Without confidence in the dollar, it would no longer be accepted as the world's reserve currency. The fixed exchange ratio system could break down, leading to instability. This is the whole problem. They knew this since the 1960s. They got away with it in the 1970s after they temporarily closed the gold window. They got the rest of the world to buy treasuries to keep the demand going. The world broke down again in 2008. They got away with it then because they did quantitative easing and just blasted new money into the system. And now we're at this point where the administration, I think, is finally realizing, like, holy shit, we don't have any factories in the country. We have no high income jobs because we've been buying more imports than we've been exporting. By definition, we've had to do that for this system to work. All the factories have left. We now need to onshore. Their own military, Nick, in the U.S. can't produce what they need. They depend on China for some of the production of the U.S. military that they need. So that I think they're realizing this, and tariffs are Trump's way of saying, shit, we have a freaking problem. we need to bring some stuff back into America. We're going to do tariffs to force some of these companies to onshore stuff. We can't keep this system going anymore. And it leads into a whole talk about stable coins and how stable coins could be a new demand for U.S. treasuries. It leads to a whole discussion about a Bitcoin strategic reserve and why they would want a Bitcoin strategic reserve, perhaps as another neutral reserve asset. You can do balance of trade settlement in things like a gold or a Bitcoin.
They're also letting the gold price go.
They're letting the gold price go. London, it seems like it's on its knees trying to come up with all the gold that everybody's demanding out of London. So we are at this, I think we're approaching the climax of Triffin's dilemma that has been a known problem since 1960. And that's why Trump's talking about tariffs. So when you hear tariffs, this is what's happening. It's like we're at the end of this system and nobody kind of knows exactly how we're going to get our way out of it. But I can see what this Trump administration is trying to do. They're like, damn, we need to bring things onshore, both strategically for their economy and for their military and for the globe that can't run this system without hollowing out America even further. It's pretty much hollowed out.
Yeah, I don't know. Look, I don't know if my opinions on this tariff thing, I guess, I don't know if it's the minority or not, but I look at this and I'm like, it doesn't even, like, it's not like I'm excited about them. You know, I'm like, oh, this is great that they're going to put tariffs on our stuff. But like, I'm just looking at like, if it's not a wake up call for our country, then I don't know what is. Like, it's not their responsibility to just be like, you know, they got to, like you said, they got to look out for themselves first. I'm more interested in why don't we have a government in Canada that's looking out for Canada? Like, why do we have to look out for everyone else? If you can't take care of yourself, then you can't take care of other people. To me, it's the airplane approach that I used to joke about with Di.
Put the oxygen mask on yourself first.
Yeah, because I'd eat some of when the kids were small. I'd steal some. I was still hungry after dinner, so I'd take some of their food. And Di'd be like, "What are you doing? That's your kid." I'm like, "No, they're going to be fine." And I was like, "It's the airplane approach. I got to tell you, I got to feed myself to be able to feed the children."
Yeah, smart.
So yeah, she didn't like it.
Those portions are tiny. I don't mind.
So I'd take anything I can get, but that's what it is. So that to me, it's like we've put ourselves in this situation that we're so exposed by this.
Yeah.
How can you not expect multiple other countries in the world to be like, hey, you know what? We kind of like maybe our country's faltering a little bit, like maybe like Italy or France or Croatia or like any other country.
Why don't we have abundant energy? Why don't we take care of our country first?
That's what so why don't we
to
make ourselves strong, and then as we're stronger, then
we can help others,
more people. So I'm like, this is like all backwards. So like, if this isn't the wake up call, and now we're like a decade behind, right? So we got to bust our ass. But like,
I think we're more than a decade. But sure, well, you're whatever. Being kind.
Yeah.
Yes.
But like, we got to bust our ass and do things quickly to kind of catch up, because like to your point, like we have a lot of opportunity. So that's
Canada's the best country. We have unlimited opportunity in this country.
But that's what should be happening.
Unlimited.
But instead, everyone, I shouldn't say everyone, but instead the narrative being fed by the, I don't even want to call them leaders, by politicians in this country is like, oh, this is so bad. I can't believe it. We're going to fight back with this. Again, it's about it's a Band-Aid solution to everything instead of really fixing the core of the problem. Yeah. And then it's like, let's boo the national anthem of the hockey game. Like, what are you doing?
I know, that's how we're standing up. And in some, I don't understand. That's how we are standing up. We are booing. And what bothered me even worse when I first saw that, it was a 15-year-old girl singing the song.
Oh,
and like she's singing the song,
I didn't see that.
And they're booing. And I know it wasn't directed at her. Like, I get it. It's not directed at her. Everyone told me that when I complained about it. They're not directed at her. I know.
But you know how hard that is for a 15-year-old while she's singing?
But this is the way Canadians are going to protest. Boo an anthem by Canadian. Like, how about we just invest in our country? How about we just build things here? How about we like double down on our energy? How about we double down on everything we're great at here? Instead of being shy about it.
Get your own house in order.
Get our own house in order. I just don't understand. I think this country is so rich in just natural resources that it's been pillaged by these politicians for so long. It's been easy for Canada to kind of stumble along into the G7 because we just ooze riches out of this country. But if you had a leader who built the country here properly, I'm telling you, everybody would get checks in the mail. Do people know what that is, Nick? Checks in the mail or direct deposit? People would get direct deposit.
It's amazing that people kept up with checks.
People would get direct deposits into their account, and the memo next to the direct deposit will say, "You're so rich," because the country is so rich. Yeah. This country should be selling energy to everyone around the world. It's enough. I think as Canadians, like you were very polite and
not just
kind,
energy. We have other natural.
And you know what? I'm
resources
just
as
not well educated in all these other natural resources, but I know we have rare earths in this country. We have all kinds of minerals. We have
gold. We have gold mines. We don't have gold as a reserve.
We have hardworking. Yeah, there's lots of gold in the ground here. Another thing you talked about the 407. That's another thing Canada did great. Yeah. Hey, we have all this gold. Mark Carney was also around for selling the gold. Hey, we have all this gold.
Yeah. Did we sell it while he was around? But he was banking.
I think
Canada,
we started.
So he wouldn't have.
But why wouldn't he advise against it? He's the friggin' banker.
Well, because officially he's the Bank of Canada. He's not supposed to.
He's neutral. Yeah, he's neutral. He can't say anything. Yeah, I'm sure.
It's not a political post.
And so another thing we have all this gold, and what do we decide to do with it? Hi, I'm the country of Canada. No other country that has gold is actively selling their gold. The US isn't, Europe wasn't, China wasn't, Russia wasn't. We're the country of Canada. How about we sell not a portion of our gold? We would like to sell all of it. Hi, I'm from Canada. I would like to sell the entire country's allotment of gold.
No,
I know it's 73 ounces or something.
It's 77.
77, yeah.
But do you know,
for anyone who doesn't know gold, 77 ounces you could hold I think you could hold 77 in one hand.
77.
Yeah,
that's pretty. Yeah, I guess.
I know two hands. Yeah. That's how much gold the country of Canada has. The amount of gold you can hold in two hands.
Do you know how much we had in the 60s?
I don't know. 8 million ounces.
1,000 tons.
Jesus.
Yeah. And in 2016, the person
I would love.
It says Trudeau's decision to sell.
I would just love to be in the meetings. Like, what were those meetings like? You know what, guys? We got this gold. No other country's selling their gold. Everybody else has some savings in hard assets. Why don't we? I know what we should do. We should sell our gold.
Okay, so here's the better. Here in 2016, it was this. This will be in U.S. dollars. So in 2016, it was hovered between about 1150 and 1250, right? So call it 1,200 U.S. dollars in 2016. Sorry, and they sold 41. What did they sell? 40. I think it was 41,000. No, sorry. Might have been 40. Yeah. Figures show Canada sold 41,000 ounces of gold in December and another 32,000 ounces of gold in January. So this was December 2015 and January 2016. So that's about 40, 70, 73, 74,000 ounces.
Does it say the dollar price at that time or no?
So yeah. So I looked it up. So throughout the year, it was not at that exact time. I don't know. It looks like it was about roughly 1,200 US.
Oh.
So now it's
more than double.
2.5 times.
It's 2,900.
2.5 times that, and we sold it for what? For some short-term thing.
What did we do with the money?
But just a line. It's probably a line on some budget item, so we could spend on some other bullshit to we charity or whatever garbage that they wasted money on. Like it's just.
Did we get a helicopter out of it? Did we at least get a helicopter for the military?
No.
One helicopter.
No. We got new slingshots, maybe. Yeah, no, I'm serious. It's like, but like when you see these numbers,
I think Canada's problem. Canada is too rich. I think Canada's problem is that we're too rich. It's just allowed for the wild politicians to go in there, do nothing for too long. We are too rich, and we just continue to waste it. We need just a proper.
You know what I want to know?
Taking the reins on this country a little bit.
I agree. But you know what I really want to know? Why did we keep the 77 ounces?
You know what? Probably somebody just forgot about it. They probably found it in the corner after.
Or it's like
they probably found it in a corner.
Yeah, or it's on display at the Mint or something. So they had
the Mint in Ottawa. They put a little pile. This is Canada's gold pile, everybody. And it's a little plexiglass box around it. And you can walk around it in a circle and look at it from all angles. And you can take a selfies with it. Hey, here I am with Canada's gold. That's the Hey, we have a lot of gold in the ground. Don't worry about that. This is everything that we have as a country on our balance sheet right here. I can't believe we list that on our balance sheet in the country.
So that's 70. So 1 kilogram is 35 ounces.
I would love to see a list of countries around the world.
That's 2 bars. We have 2 bars. So you know what you see like
it's just it would fit like right here. It's ridiculous.
Oh boy.
But I would love to be in those meetings.
I don't like laughing. You know what I don't? You know I'm laughing at like.
No, you're allowed to laugh at this.
No, I know, but I'm just thinking. Like, I don't want to. I want to be talking about.
No, it's so ridiculous.
No, but I'm just saying. I want to get to the point where it's like we can talk about. Holy shit! Did you see what they did? Like that's awesome. You know, and when I travel, I can be like, hey, do you know what Canada just did? Like that's you know, like. But I feel like that's.
We used to be that. Like growing up, it's like, I used to like. we used to stitch the Canadian flag to our backpacks traveling through Europe. Like it was like a thing.
Yeah, because people respect it. Now they just feel sorry for you, so you still do it, so they don't bother.
They really do. Like when you travel, you tell you're Canadian, people are kind of like, there's some sympathy now. Yeah. It's kind of like, oh, they don't know how to react really. Like, oh, you were once great.
Okay, but yeah. So I agree, but hold on. I just want to be clear to everyone. The reason we're talking like this is because we think Canada has so much potential.
Unlimited.
We love it.
I think it might have one of the most potential. I think it might have the most potential in the world.
We're not ripping on it like that. We just got to get our heads out of our butts and kind of make it happen. You know,
fresh water, like just fresh water. I haven't seen studies lately on America, but I know fresh water is a big deal coming over the next 10, 20, 30 years.
Oh, yeah.
We have tons of fresh water. We have the Arctic. We have the Pacific.
Well, the Arctic's slowly coming back. Like more and more people are talking about the Arctic again because of what it holds. And I mean, it's still relatively small, but it's kind of coming back. People are circling back because of the potential of it. And I don't think I think there might be one of our politicians, I feel like Poilievre might have started talking about it recently. He did a press
conference up there.
Did he? I forget. Okay, so I forget what I saw, but and I mean, he could just be blowing wind.
Yeah, if he gets voted in, we need to see results.
Who knows? Yeah. But at least he's talking about it. He's the only one that's saying the right things. The other ones aren't even saying the right thing. So then you're like, well, now you're like really out to lunch.
I think they announced a high-speed train announcement. Like, why today was a high they're going to call an election. Why are they announcing plans for a high-speed train rail across Canada today? Like,
it's not even across Canada, isn't it? Just between Toronto and like Montreal or Quebec City?
Oh, is it?
Yeah.
Oh,
it's
I
only
assumed
like
it was
that.
across Canada.
No, I don't think it is.
Okay, well, I don't know.
No, can you imagine? Like what's that? How long? Like if it's slated for 5 years, I mean,
Canada can't build anything in 5 years.
If the government's going to do it, it's going to. Yeah,
if the government's saying 5 years, it's 15, possibly 50.
Exactly, and 3 times the cost for sure.
Yeah, 3.
Well, they're using a 2% inflation rate.
Yeah,
so if you plan for 15
at least
years,
5 times the cost minimum, likely 25 times the cost.
Yeah. Yeah. Anyway, so but hold on. But that's why that if you, even with all this fiasco going on, still, I mean, look, it just maybe at a smaller degree, it's getting amped up, but it's gone on for a long time. If you structure things right, you can still finish ahead or play within this crazy system and do what you need to do to be able to do things.
I think that's the biggest thing. How you started the message that we've all figured out, okay, you need to generate some income. Then you want to buy some productive assets. You want to take the cash flow from that productive assets. You could do anything with it. You could do what we talked about today, the Bitcoin real estate asset strategy, BREAS, take some of the cash flow, buy another asset, right? And mix and match.
Yeah, well, you can take some as the thing gets built up, buy another real estate property, and then take some cash flow from each and put it.
Yeah, and I think the thing to understand is that we've seen people do this from starting from zero, nothing, scratch.
Many people.
And
you know what? There was someone that I just spoke to that had started when, I forget. I think these people started when they were 50. Yeah, I believe it was 50, not 60. But they started when they were 50 and they've done quite well for themselves. And they were so happy about it. I'm like, guys, you have no idea how many people feel like when it wasn't 50, they were in their 50s.
I think late 50s.
Was it late? Yeah, but I think they were in their 50s. And when I said, you have no idea how many people start then or look at starting then. And they're like, it's too late for us now. We can't do it now. And I mean, we've seen time and time again that you can, and we have seen a number, like a good number of people start when they're young too. And when now that we've been doing this for so long, you see people when they're young, and you've seen them actually kind of go through the different stages of life. Yeah. And when they look back 10 or 15 years later, the impact's monstrous for them.
Yeah.
Like monstrous.
The compounding of it is
that's what it is. That's the biggest difference.
The compounding of it, and the future's kind of bright. Like if you are,
the future's bright after all that shit we just said. The future's bright.
Because we're laughing at Canada, but like Canada's like so rich that it gets away with it. Like it's a miracle. It's actually the future's bright because if you understand that the debasement of the currency is going to continue, if you understand Triffin's dilemma, so that gives you some context of what's going on in America, why America and Trump are talking about tariffs, they have to onshore stuff. It's been kind of, the system is kind of starting to break down. They're realizing Triffin's dilemma is really coming to roost right now. Can I say we're coming to roost? Do people know that? It's happening. It's the climax.
You know what? Your generation, I'm sure they know lots of stuff.
What is the saying? Hens are coming home to roost? Is that the saying? I don't even know the saying.
Do you even know it?
Yeah. I guess I've just been using it too flippantly. I've been using it very flippantly. I haven't known the actual phrase.
You're preparing your like grandfather's sayings. I can picture you sitting in a rocking chair talking to the youngins and saying those things.
Yeah, it's better than talking about I know modern words too. I know sus. Hey man, what's going on in the world right now is sus. I know that. But would you rather me say humble pie or sus? I think we can all agree humble pie is a much better saying than sus. Listen, man, if that's old for our generation, I will go with humble pie all day long. Sus. You know what I mean? Like, I didn't even know what it meant. I had to ask. If you're listening and you were like me and you don't know what it means it's suspect. That's what's going. That's if you look at something and you don't really like what you're seeing, you say, "Oh, that's sus." I think I'm using it properly. Yeah, if not, I'm gonna have to eat some humble pie.
Oh, you like that one?
I did. I really appreciated that one. But I think we're positive because if you understand that debasement is just math, like they have to debase the currency 7 to 8% a year, you better get some assets that outpace the debasement. Choose real estate if you want. Definitely start looking into Bitcoin. I had somebody, Nick, recently who joined Rockstar. They were at our last event. They said they were rolling their eyes when Ben Perrin was on the stage talking about the Aqua wallet and Bitcoin and doing that demonstration, like a live workshop that we had at the last event. He was rolling his eyes. That's what he said. Over the Christmas break, he said he read 2 books.
Oh, yeah.
The Bitcoin Standard and Layered Money. Layered Money by Nick Batia is an amazing book. The audiobook.
I've never read that one.
The audiobook is, I believe it's him reading the book. It's fantastic. It's an easy listen. It gives you the history of credit and the history of banking and the history of money. Wonderful context to why we are at the stage we're at right now. Highly recommend it. He read both of those books and now he said, okay, he gets it. So I would just say that we think the opportunity ahead is glorious because of we have real estate and now we have this Bitcoin thing that allows you to put some of your savings into something that is outside of the system. We didn't have it before. And you were trapped inside the system. Now you have something outside of the system.
And the technology that keeps changing this allows you to do it more and more. And it's changing faster and faster, giving you more and more options around this stuff. But yeah, the key to having some stuff outside the system is
it's nice. It's comforting.
It's important. Yeah,
that is a hard asset with a compound annual growth rate in fiat terms. If that's the way you measure it, it's beautiful.
Yeah, especially with certain things we've seen over the last few years to have some assets outside the system.
Well, it's like insurance.
I'll go back to gold. I mean, gold isn't the same. It's not as portable and stuff like that, but. It's still outside the system, and to have some of that outside the system is
physical. Nice, if you had physical gold.
Yes, but it's a nice option. It's not maybe it's not the absolute best option, but it's still an option.
Totally.
So what were you saying? What before I said that you started?
No, I think I was going to say something about. No, we're good. We're good.
Cool.
Anything
so yeah, we got to get that calculator online, and then
so check for the calculator and the event at Saturday, April 12th. I think the reason Nick and I are pumped is we're going from just over half a day to a full day event. We have Leon Vankum flying in from Germany to talk about how he's using his real estate company and merging Bitcoin into it. We have Richard Diaz, one of the co-hosts of the Loonie Hour, coming out to give us an economic talk on Canada, Canada's energy stats, Canada's GDP stats. I think we're all going to be blown away by it.
Yeah, so it's a deep dive into Canada and what's going on.
He's really good at that kind of stuff. We have Steve Jagger coming out to talk to us about how technology is further enhancing what they're doing at Addy and democratizing real estate. So we're going to get a tech real estate update.
And how investors are using that platform now for small
property
to raise capital,
single lots,
and making life easy for themselves. Yeah.
That's a big update. We have Francis, the founder of Bull Bitcoin, coming up from Costa Rica, so talking about living a sovereign life, and he's a true sovereign individual coming and giving his perspective on things. Mike DeZormo on the team is going to give all the different tips on what we're seeing real estate investors do in today's world to increase their cash flow today. That was so well received last time. Yep. You and I are going to give a talk about how we built this business and how we would approach any business building venture now, from 0 in revenues, 0 in clients, 0 in database, to 6 figures, then 7 figures, and 8 figures. So we're giving a business building talk. We're going to do a local real estate market update. We're doing an economic update. Ben Perrin is coming out to hang out with us again. We're covering the basics.
It's really that we focused on those 3 pillars that we talked about at the beginning, and that's kind of the focus of
real estate, business building, and Bitcoin.
And having those Yeah, or
hard money.
Yeah, and
I like saying Bitcoin.
I know you do. That's why I got to counterbalance you.
Okay, that's fine.
No, I mean you can say Bitcoin, but just not every. Some people.
Oh no, I'm going to keep saying it.
Good, say it. So, but that's the three things that we're kind of focused on that made such a difference. So,
and just come with an open mind. Like even if you don't believe in real estate or don't believe that you could start your own business, I'm telling you, just come with an open mind. Just come with an open mind. You don't know what's possible. Drop a lot
because the biggest thing here is it's not theory from like books and seminars.
No, this is everyone who's done it.
This is everyone who's done it and
doing it.
That's what I was going to say. Not just, still doing it. The people that are like talking about it like on stage or whatever, but not just that. It's, to me, what's more important, what changes it, it's the people that are there are the people that are doing it as well. They're not just looking to do it. Some people are getting started. Yeah, they're, different people at different levels, but the people there have done it, are doing it. I've done a ton. And that's the biggest difference is it's people, it's boots on the ground, people that are implementing and stuff you can take away and do something with tomorrow.
And the theme for this event is freedom, based on Braveheart. That's the theme, freedom. And because it's based on Braveheart, we are getting a bagpipe player to come to the event. I know, Nick, we don't have it booked yet. This is happening. We're having bagpipes there. So at the end of the break, you're going to hear bagpipes. That will probably annoy everyone, but I'm going to cheer and be happy. And I think we need to get the guy.
What event's complete without a bagpipe?
Yeah, exactly.
Yeah.
And I think we need the guy to go through like where the sponsor area is and then come down into the hall, right onto the stage and play the bagpipes.
Yeah, and we'll be giving out earplugs, I guess, for people if he does that.
No, bring your own. Bring your own earplugs. Bring your own earplugs.
Because I guess we can have how loud it is. If he goes into that sponsor area, it's going to be loud.
I know. All right. Thanks, Nick.